Greetings, market rebels. Welcome to this week's macro measure combined with our sector situation video. It is Friday, February 27th, 2026. It's about 20 or so minutes after the close Eastern time. And let's see. So that's about 4:23-ish. And then here's our trusty market rebellion disclaimer. Here is our trusty market rebellion intellectual property rights notice. And then here is last week's slide. I did some highlighting. I'm Wayne. We'll get into it. This is going to be a rough one. I just very pressed for time. Going to do the best I can. Try to just rip through things when we get there. It won't take long. Last week we went with squeeze play, pure BS. We talked about some of the BS that goes on in terms of how the market can trade at times and then how it gets reported by financial media. And I'll have a follow up on that when we get to our this week's slide. Anyway, I did mention, although I left it off the slide, that my spidey sense was starting to flare up again. We asked these questions that are highlighted in pink or made these comments. So in this case, what else is looming? So clearly, right, there's just a lot out there. As we've been saying, it was sort of back burner-ish, and now a lot of things that were back burner-ish are emerging. One of those, of course, is the Epstein stuff. Um, you know, without getting into that too much, it's just the idea is that this can affect a lot of things. I think there were some World Bank people, some WHO people, could have been some European dignitary type people. It just is having that fallout, and you just don't know where it goes completely because even though they're claiming that the files are completely revealed, there's a lot of people that are maintaining that there's a lot more to come, and it's far worse than anything we've seen so far. So we'll see on that. Just worth mentioning that that risk is out there. We've talked about that we were on the cusp of squeezing higher again, and that we shouldn't rule that out, even though the market maybe should be trading lower, should have given more back. But they've done a masterful job for most of the year, really, in holding the major index ETFs, the four that we cover, above key support. And that's really been above mainly SMAs, key SMAs, and other key levels. Some of them are just flat lines where there's just been a lot of action in the past, like 690 and SPY, and then some have been fibs and things like that. We did talk last week about the back half of Feb and Sep, some of the worst of the year in terms of the back halves of months, and that we're in year two of the presidential cycle. It's the worst one. We also talked about March not being all that great as well, and that's what we're headed into. We did note last week that the jam job that they pulled off to end the week really didn't work as well as the prior week jam job. In other words, every time they need to move the market away from critical support so that more technical selling doesn't transpire. They have done that, but it's been less and less successful in certain ways. So it's kind of looking that way, but it's a tough call to even really get emphatic about that, only because we've had these counterbalancing things, which I'll talk about. We also said something's not right. That's where the spidey sense thing kind of ties in. You probably saw that we've already got some credit things. There's private equity issues. There's things cropping up in the financials. The financials were really kind of roughed up pretty badly today. So we'll talk about some of that. But yeah, last week's save was not as impressive. And then let's see, the other things are again, UOA, there's been some really nice hits here and there. There always are. Ideas we've been able to get into the UOA Pro service, but it's really not the gangbuster stuff that I thought would be really out there and to end the fourth quarter and begin the first quarter. I thought we'd do a lot better to start the year and then hit a rough spot, but we really hit the rough spot pretty early. In other words, I think we peaked out in the middle of in the SPY middle of January, and I kind of thought it would be a little bit later than that for sure. And we've been really roughly churning now really since the middle part of January. So it just hasn't been good stuff. You've been subdued in IWM. You've been very subdued for the Qs, and then diamonds, which were probably doing the best of all only just a few weeks ago. They've given a lot back, and they're threatening to lose the 50 SMA. So it's been quite interesting. As I always note, the best times for UOA are really when the market's running. That's it. That's my favorite time to trade. You get a lot of hits come in. You could see that they're just expecting rallies to broaden out. You see themes, you see so many good things, and there's that real surge you could get dramatic movement in. You could do that on the downside as well. It's just harder because they really put you through living hell on the downside sometimes, where you really have to hold on through a lot of adverse movement. In other words, you'll get a 10-point drop in your favor, then it'll pop back up 8, and then you got to keep waiting for it to get back to where it was, and then you have to wait for it to keep going below there, right? It's just they put you through a lot more, I think, and that's why I prefer trading in a bull market. The action just you just don't have much give back. There's typically the retracements are fairly minor until you've already had a very strong run. Anyway, we did note last week that certain sectors were flashing risk off, but as we've noted time and time again, the trend was held. And so we talked about a possibility of a massive squeeze versus major news-driven rug pull. We said to maintain DEFCON shields. Of course, go with 2x with me chatting. I'm still calling this super spectacular nonsense intergalactic drama because I just don't know in my all the years, I can't recall many periods, if any, that had more potential drama than where we are right now in so many ways, both domestically and internationally. And with respect to the Supreme Court and with respect to the IRS and with respect to tariffs or not tariffs and all the stuff that's happening, things like Florida eliminating their property tax. And there's a lot of things that have been talked about over the course of my adult life that are actually potentially happening or at least being discussed in a very high profile way that's not been the case until now. So it's just you add it all together and it's an extraordinary time frame. If you ask me, you add in the AI, the job destruction, the news from Block that they fell in love with, the fact that so many people could experience a Block future, Block XYZ or whatever future because of AI. You've got the Anthropic guy coming out talking about the window's going to be very short before all this really does play out in so many ways, and all these different professions are threatened. And what does that portend? I think there could be a great stock run as a result of it that is leads to a disaster. But what do I know? I'm just saying it could start making these bottom lines look great, but then unless someone figures out how do all these people that had good jobs find something comparable to support themselves, how does that turn out to be a great thing without their salaries, right, flowing through the economy? The typical consumer consumption that accounts for about 70% of the US economy. So, especially with the housing market, which is a massive part of the economy, and much of consumer spending is related to housing, but that's sort of in a seized up situation to a degree. So, there's delinquencies going bonkers in people falling behind in so many ways. People between the inflation and the lack of income growth and the job losses and so on and so forth. It's utterly mind-boggling, where we are in so many ways, and yet the market, if you want to just judge it by the SPYs, right, you're about 12 points, 2% off the all-time high. So to me, right, you're really in some sort of an unbelievable, potentially historic time that could be incredibly transformative, positively, negatively, both. And, I feel like the market is whistling past a lot of it myself. I feel like there's a lot of risk there. but they could also be, are you whistling past the graveyard, as is said, or are you whistling to somewhere with a happy tune for the right reasons? And the way the market's behaving, I can counterpoint this a lot, but the truth remains at this very moment, right before possible over the weekend, imminent war breaking out and other things like that, you're still holding trend. Now, I'm concerned. I'm not long very much, and I do still, other than double the number of VIX call spreads that I typically hold, right? So I've got that on. But because I'm not, and the reason for that, let me jump to one of our points down here is cutting to the chase, right? If you want to believe that the bull market has many years to run, like so many people argue, then should we really be all in on it at all times? Or should we wait for the clouds to pass? And I'm from the latter school, right? Right now, I know from historic research that if you miss out on some of the very worst times, that really puts you way, way, way ahead of people that do not, that have to wait until you come back, which can take a very long time. Ask anyone that held on to Cisco, but you can even go Intel or Microsoft before that. Because those also took over a decade to get back to where they were. I think in Cisco's case, it was 25 years. But the point I'm making is that I'm not so sure that things are cheap here. I'm not so sure what the catalyst is going forward in terms of why would you start to see. I don't see anything happening in the economy that's got me jazzed up at the moment. So what's the story going to be now that NVIDIA has the EPS has passed? And we said many times in these videos that they often hold the market up until then. And so will that be the case again, where the market was held up for the NVIDIA saves the world trade as they make it out to be, or opportunity, and then right now you finally get the rug pull because they were able to pull this off, and now they're done with that gambit, and there's really nothing to point as to why we should jam. I'm not saying we won't jam. I'm just saying that's just one way of looking at it. So let's go through point by point, but we're not going to do much of this. I'm just not making light of this war. These are serious developments. I don't take it lightly or cheerfully. Like I said, you can clearly see that I'm hedged. I'd rather lose small on my hedges that have they're very one-sided, potentially small losses if they don't work out. And unfortunately, if things do go to hell in a handbasket, the scores will probably be enormous. So that's all I'm doing, just because I see the risks building, at least from my perspective. So there's so much energy stored due to this narrow range. You have a potential war looming. I don't know what the third order, as I jump down here, second, third order effects are. I don't know if they're priced in. That's what I'm looking at. People think they've got everything gained. Oh, this is what will happen. It'll be over this fast, blah, 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 blah. You just don't know what can happen. And that's why I think, right, I personally am not going to be just long, 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 long everything, 3x long this at this very moment in time. Nothing's cracked, but I'd rather get in after that there's resolution, those clouds have passed. And if I miss out on the first few percent, I'm okay with that. I'll get back into some names that I think are going to bounce strongly or that are still performing remarkably, even at this, what could be the latter stage. So what else is looming out there? There's a ton. What could hit? Who's next, right? I don't know, but there's so many more people that are rumored to be a part of things that could end up becoming front page news that could have other effects on things. We will see. Ukraine, this will be the latest example of just headline nonsense. They're talking now that Zelensky wants to end things. I saw that came across the tape, so to speak. And now what? We're going to potentially see that happen, and then that launches a rally. Right now, does anyone really think that Ukraine's been weighing on the market, that it would rally, that it's over? Personally, I think that's a load of what. But this is what they do, and that's going to get me down here to NVIDIA, because I just want to mention this soapbox thing I talk about, and that is that, right, you could have absolutely nailed NVIDIA's EPS expectations, right? I think they shattered what was expected. They shattered the whisper number. They're making, by some folks' math, they're making I think they're making I want to say it was like $500 million a day, right? That they're making per day right now. And yet they rug pulled the stock even though it was up at one point after hours. So there was long side UOA. We had an idea in that probably triggered and ran into earnings. You probably could have rolled up a little bit there at one point potentially, whatever the case may be. But that's my point as to why earnings are not a picnic. You can get it all right. I've done this many times, like way, way back when. I've done this many times and then realize that, right, it's really about what they want to do. So I think that to go kind of cut to the chase and put it in a nutshell, I think too many people were right about NVIDIA having a phenomenal quarter. And for that reason, they rug pulled it, right? Because so many people had that bet on. And you could say, well, how do they do that? Well, the deep pockets players can do that, right? If they kind of work in concert to rug pull something, and they might not even have to communicate. I would bet that they do, but they might not even have to communicate if their own algos can tell that the other deep pocketed players are planning on doing that, then they'll just jump in with it because in the end, right, that's who has the final say. So I'm not going to go further than that, but I'm just saying that this is why you'll hear us talk about, we do put earnings ideas in. A lot of the times it's reluctantly. And the reason for that is because you can do all the research in the world and really have something. This is a phenomenal example of something that crushed it and got crushed anyway, right? And you could say, well, this is what happened on the conference call, or they didn't really talk about this or that, or Wall Street wanted to hear this. And they can always do that. That's the whole point. That's the whole point. They can do whatever, they can say whatever they want. And there's people that actually are going to buy whatever cover story they come out with. I'm here to tell you that I don't know for a fact that that's what happened. I'm telling you that it was probably a plumbing job, where the plumbing made it possible for them to do that. They did it, and they made money from it, and cost a lot of other people a lot of money in doing so. That's the way that they roll. Anyway, so that's enough of the soapbox. So yeah, we're still, I feel like we're flirting with disaster. They just keep getting too close to breaking key SMAs. You've got these financials having trouble now. You've got in the form of KRE, XLF, and excuse me. And so this could be looked at as a big distribution pattern, basically a rounding top. In retrospect, it also could be looked at as just a violent, relatively low volatility, even though day to day is high volatility. But because the range is narrow, a narrow range pause before we squeeze even higher. And you just can't rule them out. I'm just telling you, I would not rule either one of those things out. The energy is very high right now, in my opinion, meaning, right, that there's a lot of focus on this potential war situation. There's a lot of psychological, emotional attachment to that and other things that are in flux right now or looming. And that could resolve in a way that's very strong in either direction. My whole problem, though, is I don't think that if something goes wrong, should this war get started or whatever happens here, and things do not go according to plan the way it's almost like people have been trained to think that they should, and things go, let's say, sideways or not so well for whatever reasons, then what? What does that do? So I'm leaning towards no. I don't think it's all priced in, but I am not an expert on that, and I'm doing it in my spare time at best, right? So take it for what it's worth. I'm just saying that's my gut take on it. So I'm going to stick with the counterbalance theme. Look, I can use the VIX to make this point alone. I'm going to do that right now. So just bear with me, stop the share, finally get into the charts. We'll talk about everything and we'll wrap up. But the problem is that it literally, I just sat there and I'm like, I'm not going to type out all these sort of point counterpoints and then go through all this week. It's just not in the cards for me. And what I want to do is I'll bring up the VIX on just a basic screen here. VIX, get this broadcast going again. Okay, thinkorswim not cooperating. There we go. Okay, let me just reposition this and I can start to share again. So let's do a share. of screen, let's see, screen three. Share of screen three. Here we go. I'm going to maximize this, and I'm going to give us a better view than that. Let's just look at 3 months for now. So this is what I'm getting at, right? I think I showed this last week, but you have this sort of tame kind of VIX behavior, and then you have really since the middle of when we talked about the market topping out in mid-Jan, you've had this sort of wilder pattern, as I've said on a few videos and on and on cocktail hours. At this point, I feel like someone on balance, right? I feel like players are thinking something is looming that's going to create big trouble, and they just don't have the timing down perfectly, so they keep jumping in and jumping back out again. That's my sense of it. So in a way, you've got this sort of violently behaving barometer in the VIX, and you also have a VIX that's not even at 20. Right. So it's well off the lows, excuse me. But despite it all, my point is that you're not even in the mid 20s with everything here. And I'm not talking from a frustrated long position, by the way, because I really know that things have to break loose for me to really get what I'm expecting out of this if with the hedges structured as they are for me. But this just is not very on a basic level, this is just not very impressive, where you're not even elevated above 23 or in the mid 20s. So with everything that's looming here that potentially starts, next week, has been talked about, that is one reason to say, well, who cares? But at the same time, right, we know that the VIX during really subdued times trades more like that period or this period. It doesn't trade like this. So that's why I'm saying you can point, counterpoint, or counterbalance everything very easily the way it is right now. I could probably, if I had the time, I could probably list at least 50 point counterpoints to this market right now. That's why I think it's very hard. And right, the whole idea of being a trader that's short term, especially, and that's discretionary, is that you can select the times at which you care to engage with the market, right? And when are you going to do that? You're going to do that when you think the odds are probably significantly in your favor. So the way that I look at it, and I'm not looking at it from every strategy possible, I'm looking at it in a basic way for directional movement or the lack thereof. The way I'm looking at it is there's really nothing here that's convincing me enough on balance that I should really be aggressively doing this, that, or the other thing in either direction. But just for me, there isn't. And I trust me, knowing that everyone wants table pounding, right? I hate to show up that way every week. But if you stop and think about it, as I say, every single time, we've been struggling quite a bit. We've been struggling quite a bit to come up with a really strong lean in either direction, right? And as I always say, look back retrospectively, in other words, has that been the right thing to do? And I would have to say, yes, it is. It has been the right thing to do. And I'm not patting ourselves on the back. I'm not doing that. I'm just saying that when you can't really come up with something, I did have one time, I think, where I really thought we were going to go, and then it started and then just completely fell apart. So I'm not saying I was without fault this whole time. I don't ever think in those terms anyway. I'm just kind of guarded about it because people hear enough about all the bragging that goes on by people, I think, in financial stuff is, gets old. It's old, got old for me a long time ago. But I'm not doing that. I'm just saying that we couldn't really get a strong lean because we couldn't get a strong read. And for every good thing, there was pretty much a bad counterpart that we could find if we looked. And so right now, it's the same thing. We talked about how big this 690 level is for a long time, 689 change, 690, whatever you want to call it. We spend a lot of time above and a lot of time below and not too far from it on either side. So it just keeps showing up over and over and over again. So, we've had these sort of failed rally attempt after the high got put in here. You have this failed rally attempt. Then you have another failed rally attempt. You have to back up again to the 100. And you have an even, let's say, less impressive rally attempt at this point. But notice that the gang held things as usual. They got down to critical areas right on the 100, which is very widely followed, and they held them, right? The same thing could be said pretty much for Qs. They got it down to the 150 there in Rust. The 150 has been a bigger deal for the Qs because it's below the 100. Notice the 150 really tamped down on the Qs this week, right? They couldn't get above and hold there. They reversed hard from them. That's not typically good action, right? Good action you want to see in an uptrending market. And then the diamonds fell below the 50 and closed there, made a new low. Could be a clear out, right? Because they took out these lows and then they reversed it, of course, gang gone a gang. This doesn't look horrendous, but that is a little bit concerning because the 50-day does weigh heavily in some decision making by some folks. That's the reason I keep it on my chart. I am not a big SMA person, but I know a lot of people are, and I do know that there's reactions around them and to them, and that they're used psychologically. Like that's part of the psychological framework that gets really sort of I guess you could say, worked at times. But yeah, so here you have the IWM. It too found support on the 50, on the 50, near the 50, on the 50, on the 50, near the 50. So these things are big. They don't always get dead on it, of course, which is why everyone will hear me remind them, if you're new, put your bids in front of the 50 if you really want to get hit. Because a lot of times they just don't let it get all the way there. Sometimes it goes through, sometimes it doesn't. But I'd rather make sure if I've been riding Delta, and I'd rather make sure that I get my fill to close or whatever, if I've got Gamma, Drive, short Delta, whatever the case may be. But you get the idea. This could also turn out to be something like an ascending triangle, though. They start working this thing back up in the next couple of weeks, doesn't break down. You could just start breaking out of the upside. It's going to just look like an ascending triangle in retrospect, which is a pretty good pattern to trade in a bull market. So that's why I'm not really getting super committal on anything. We just looked at all four of them, but maybe we'll come back and do more. What I really want to talk about first and foremost is the sector behavior. So I think I told you I've got a short here in XLP. That's not doing well. It was doing well. I was really thinking about if it dropped a little bit more, I was going to roll down. And of course, get busy earlier in the week and they move it right back up on me. And now there's this sort of panic bid in there, but this is trading at extremely high valuations. It didn't crack. I thought it was going to crack a little bit more. I could get my roll and then see what happened. They moved it right back up towards the high. But this is obviously, right, if you look at this is a defensive sector. Real estate can be defensive. Healthcare, okay, can be defensive. Utilities can be defensive, right? All of those, look at how those performed this week. New high XLU, new high or very close to a new high XLP, XLRE, new high, XLV back towards the highs, right? So this is what I'm getting at. This took on a really defensive look. These sectors did anyway. They saved everything yet again in XLI and XLB, where they were threatening as of yesterday to really break down, and then the save came in. Now, some of this is related to other things that could justify that. So I'm not saying it's all, I'm not calling that manipulation, but just right, it was sort of staring, uh-oh. And of course, like you got to always give them the benefit of the doubt, right? Because until things crack, they're going to keep doing this. They're always going to keep coming back in thinking it's a buy, it's a buy, it's a buy until and when things crack. With respect to energy, right, I think that's a different story. There's probably reasons for this, as I always mention. Plus, you got the geopol going on. So that makes a new closing high. But I think that's more of a geopol thing. Your leadership that you really want to see, XLK, that didn't do it. XLC was sort of a nothing burger until today. Then they got a hold of that. But overall, right, these kind of wash each other on the week. The defensive sectors did well. Financials had a rough one. We'll look at that further. Discretionary had a rough one. XTN backed off. And that's the story there. So I put that as slightly more defensive looking. And I also would bring in, at this point, I'm going to bring in this factor here, which is TNX CGI. And this is what happened to the 10-year yield. So you're near 52, not at, but nearing 52-week lows on the 10-year yield. So this is pretty interesting, right? Because why is this happening? Why did this thing start? I think there's really, that's just kind of showing you to an extent that there was this move into bonds, and that's risk off behavior. Just like the sectors are kind of suggesting defensiveness, sort of risk off, right? Another thing we've looked at, which I think a lot of people look at from time to time, is Bitcoin. And it started looking like there might have been a little bit of something here, but by the end of the week, right, it was another sort of fizzle out after trying to lift, right? So that's not a good look to end the week. Where was I? Yeah. Oh, by the way, I wanted to mention VVIX too. This is the volatility of the VIX. You can see that this is behaving the same way. As I said with VIXI, right? VIXI is up near these highs. This is the shorter term. Uh, this is the shorter term VIX, I believe. And this one is starting to lift up towards the highs of the range, right? So what I'm getting at with the VIX and VIXI is that there's something out there, and if you add in something like this, where your regional banks, which we had an idea in here now today, I think we finally got some paper on this, but this really is looking rough now. And we have a bearish idea in place as a result of some paper that showed up. But this was a really rough day. I mean, you dropped 5%. So there's starting to be the perception, kind of some of the things we've talked about that have been bubbling for a long time. They're starting to sort of hit the tape a little bit. And, you see what happens here where you're down from 74 to below 67. And that's been only just in about 3 weeks' time, roughly speaking. Now, XLF, I think the technicals actually look worse than KRE, but it didn't have as bad of a day today. It was only down 2%. But this is below the 200 there in purple. You've got your short-term SMAs that are already downsloping beneath there. Your longer term, your 50 and your 100, they're also downsloping. So that's a really concerning thing, right? Because we know how many problems have really begun in the financial space and then sort of spread out and become problematic where people really start to sell. And you could see what happened with yields, right? So I find it very difficult. Here's lower low here. This doesn't hold and this rolls over again. I mean, I think you're looking at 47. So that's not a disaster by any means, but that would be dropping down another 7 or 8% from where we are right now. So that's a pretty big drop on that one. If it keeps going to the next fib, the next retracement level. And that would only be the 38.2, by the way, from the move I'm charting anyway. So, but yeah, KRE is also looking rough. You got the defensive movement by into bonds, and you see the yields dropping as a result. Where was our market breadth? We want market breadth here. Right here. Yeah, so here's market breadth, and I'll blow these up a little bit. This was not a disaster. I think last week we said the problem with breadth might be that it can't really get too much better, that it doesn't often get much better for too long. Usually you have a little bit of a pullback. And so I wouldn't really say awful things about the way breadth is held in there. I don't think I don't think that's a fair, objective way to look at it. I think breadth has been very resilient overall, and I think that it's just correcting somewhat after being very strong. So you do have a couple issues in terms of things like the McClellan oscillator, which is threatening to, worsen and test the recent lows that we've seen this year, and that can be shorter term oriented, and it can start to lead and bring the McClellan summation down. So maybe that is something worth noting, but it's not really there yet, right? So I wouldn't say that this is a critical level that it's at just yet. If we keep seeing rough stuff happen, it's going to be getting there, and that could start to pull McClellan summation down after it really powered. And so, what would that mean? That would mean that there's probably a lot of disappointment, right? That a lot of people were positioned expecting this to be better, And unfortunately, that second year of the presidential cycle is doing what it often does. So, and then maybe March does what it sometimes does in a really ugly way. So that's been my recollection for March. It's not always bad, but I feel like when it has been bad, it's been really bad, relative to how it normally is. So that's the concern that I have there, is that you ended this month on a rather sour note. They did manage to hold things that probably did keep some candles looking a little bit better, that you didn't really plunge today. But yeah, I think there's definite concern out there. And I feel like if you look at SMH, which we should always really do, we just get us off percentage so we can talk about, Lord, we can talk about price. But let me get this to hopefully expand a little bit. But I did cover this. This basically you have a false breakout, strong reversal. I soapbox this a little bit during cocktail hour, which is why I always implore people to be careful with their breakout risk, because it's not just that it backs up a little bit and you kind of like dangle or should say dawdle around and don't do much. Often, right, this is a good signal actually to take a reversal trade and fight against the trend when a breakout fails. You can really say, okay, well, what's going on there? They lured a bunch of people in thinking we're going to go in front of NVIDIA, and instead, right, they've been completely rug pull it, and of course SMH, and you plunge. So if you overstayed your welcome, hesitated to get out, thought you'd get a bounce, of course you didn't. And this is something, it's something they do all the time. It's something they do all the time, which is why you'll often hear me talk about when you get this type of breakout. I like to try to get that quick roll in and quick trim, or quick both, where let's say you're a 10 contract trader, you sell two, you roll the balance up a little bit. That way you have a little bit of a cushion. If it does start reversing on you, you could say, oh man, and you can still eke out a small win. Psychologically, you're still happy, and you're probably even happier than that because you were smart enough to be disciplined, and then you got out when they did really pull off the rug pull. And that's a critical thing. But I mean, more importantly, this NVIDIA plunging here, not if this doesn't hold, right, that's really bad. That is a really bad sign. People are talking about a lot of these sort of, let's call them shenanigans, that some people are calling it basically shenanigans of what's going on there to really goose the situation to overall. You have to look into that yourself. Ryan's talked about all the deals and contracts they've made. But that would be a really bad development to lose that stock and have it start plunging below the 200 day. If that starts to happen, and there's so many people that are along that, and they're going to have to sell, and there's gaps that can start filling. So if there's sort of problems that get uncovered on a corporate basis, that's a big problem. And we're looking at more of a money flow type, money flowing in, flowing out. This isn't always right a harbinger, but there's been a lot of, once they made it out like this is a world beater for decades to come and convinced everyone of that, they've been selling the hell out of it, right? If you want to believe in the money flow type concepts. So that puts me not where I'm an instant short, but I know that if it does fall, it could be like a take your breath away thing, where people are like, how could this be happening to NVIDIA? And that's because they've already positioned themselves right that way. And a lot of people are maybe going to be caught holding the bag, as like people like to say. If you would have tried to go back to late last year and told someone, about Hood, everything was coming up roses for Hood, and the stock's now been cut in half, right? So if you told people about some of these other stocks, and there's always stocks like this in every market I've ever traded through, where you try telling somebody that Duolingo isn't going to be this world beater when it's trading at nearly 550, and they won't believe you. And if you told them that only about 7 months, I'm sorry, only about 9 months later, it would be trading nearly $100 a share, they wouldn't believe you. They would be like, "What are you, nuts?" I've had this conversation with people just from doing chart work, telling them that there's a lot of downside, And they're like, where do you think it could go to? And my answer is, I think it can go here. And they're like, you're crazy. You got to be kidding me. They just can't even conceive of that happening. How long do you think that'll take? I don't know. I mean, could take a year, 6 months, could take 3 years. I mean, that's very hard to pinpoint. Oh, you're crazy. All right, I'll talk to you later. You know, that kind of conversation. I've had those conversations. I'm not right on every one of them. I'm just saying that you can see where there's really big risk and people just do not want to believe it at the time because people fall in love with stocks. They become true believers, you know, and I feel like you just want to be cold about it. You know, you might like the idea, but it's really about the potential that it still offers more than if you love the idea. You've always got to evaluate. I think you always got to evaluate that kind of a thing. But you know, these are companies like Adobe. You know, where was Adobe trading? You know, 650. Not too long ago. Well, what, a year ago? Look at it. You lose $400 in value, right? What about even the mighty microshaft, right? Even that, right? At 550, here you go, right? You retrace now to the 50% retracement level, and you might not be done. We'll see. But I mean, you could get to 61.8 with another $40 plunge from the lows. So, um, you know, these things happen. I mean, it happens over and over and over. There's a gap down here that it left. When you start returning towards the gap is the only time I care about it. Once 4 days passes and it's not even thinking about closing the initial gap right there, I don't really worry about it anymore. It's off my radar till the stock starts weakening. You know, now that it rolled over, yeah, I mean, this could be a big problem, right? So there's a lot of obviously, right, if Microsoft and Adobe can get disrupted by what's happening with AI, then a lot of things can get disrupted. These are right. These are uh, uh, formerly, at least, and maybe in the future, these are, you know, cash cow type companies that just produce have produced so consistently. It's been utterly remarkable in terms of how much money these companies make quarter after quarter for year after year after year. But people are probably, you know, some would say they're overreacting, but you know, we don't know the full fallout from AI, how long that fallout takes to really envelop us completely. So I'm really more in that let's be smart camp. Let's get ready with your hedges or your VIX call spreads, your downside put butterflies, your put spreads, whatever you want to do. You know, don't jump the gun, don't rule it out. If you really feel like some people are arguing that the whole Iran thing is not priced in fully, and in their view, and that there's going to be a lot more that comes out of it. I don't know. I mean, you really have to be dialed in to really speak on that authoritatively, and I'm about as far from those circles as you can get, unless I move to like Bora Bora or something like that. But I just mean, of course, figuratively speaking, I have no idea. I don't have any insiders that I could call that are going to spend any time telling me anything about what's really going on, you know. But yeah, I mean, I think it's possible just because, you know, that region, you know, the disruptions to this, that, and the other thing that could flow from it are possibly great. I'm not fear mongering. I am not a perma bear, nor am I a perma bull. I'm willing to be I do my best to be objective and go with the flow and try to call it like I see it and use a similar, you know, a frame of reference, a window in which I look at the markets from week to week, you know, day by day, and try to stay consistent and just try to get better at it through, you know, more experience and essentially more practice. And then by tweaking, you know, some of the things I like to look at and maybe coming up with new ones or investigating new ones other people have developed. So that's what I try to do, and keep it nuts and bolts because, you know, these videos are already very long and there's so much going on and I'm me. They're so long as it is, but I don't want to go into all these other techniques that we could be going into, except for when they matter from, you know, time to time. In other words, you don't see me talking about the 500 week moving average, right? Sorry, 500-day moving average or the 1000 day. There's no reason to really talk about them unless, right, you're in a real meltdown scenario, right? That's usually when they come into play after you've been in a bull market is when all hell is breaking loose and people are then like, okay, well, the 200 got obliterated a long time ago. What's left? You know, so yeah, you're not going to pull all your techniques and tools out of your tool bag. every week or every day, but it's good to know a lot of things. So when you're in that situation, you can look at things that are pertinent, and right now I think it's just pertinent that the sectors are concerning. The risk off complexion definitely took a step forward as opposed to risk on. So I feel like the tug of war between risk, we were kind of forcing a little bit more of a bullish take at the end of last week. I'm not really forcing a bearish take. I'm saying, yeah, I'm a little bit more bearish when I look at the charts. But it's not like I'm an imminent, like, we got to go short everything. It's time. This is going to be a massive rug pull. I think it could be, but I don't feel like you're there yet with the fact that you managed to yet again hold the key SMAs in in all these major index ETFs except for the diamonds. But that is close enough. I mean, you're a whisker away from the 50-day and the diamonds, right? Everything else you managed to hold on. So I feel like someone's wrong here in my book. People that are overhedged or really hedged up, or really speculating to the downside, thinking we're going to implode. They're either right or wrong, and the people that think there's really no big deal, we're going to be fine, and we're about to just keep lifting. They're either going to be really shocked if we go full risk off and we drop another 5% or more in this market, or they're going to be rewarded for just showing up every day, ignoring building risks. And because a lot of times in bull markets, the market manages to muddle through relatively unscathed, as they say, right? It doesn't always get pasted, but you're just in that window where I feel like you could get a pasting. I don't always feel like we're about to get pasted, but I feel like with the way things are shaping up and the great number of catalysts out there that could trigger a pasting is high, and that works against you. So I think to sort of end things, I think the real risk, right, is not really obvious in the charts unless you want to nitpick your way to, well, what about this or what about that? And we could do that. But I think the real risk is on the news development, economic side. And I do think that news has been the problem. Or news will be the problem, if there is one. The lack of news would obviously be great, which I would hope for, but I don't think we're going to get through this without a lot more news happening. So on that note, I'm going to wrap things up, and I'm going to wish everyone a great weekend. At some point in the future, we'll be able to go more in depth on this and break it up into hopefully other videos. But for now, I'm just doing the best I can. I really had no time to prep and like to try to get things done sooner than this, but it is what it is right now. Sometimes it goes that way. So everyone take care. Thanks for tuning in. I hope you got something out of the video, and see you all next week.